Good day. Welcome to betterreturns.ca/TV. Today we're going to be chatting about crowdfunding. Lots of excitement around crowdfunding. We normally chat about exempt market. And the interesting thing about the exempt market and the crowdfunding is I think we're going to see a lot of similarities and perhaps a lot of working together with the exempt market and crowdfunding. So today we have an expert in crowdfunding, Tony. So Tony, why don't you introduce yourself?
Hi, my name is Tony Arias. I'm CEO of Healthy Crowdfunder, the first crowdfunding portal that will be focusing on health wellness and high-tech health venture.
Good, good. All right. So Tony, tell us a little bit about crowdfunding for viewers that aren't going to know anything about what is crowdfunding. Tell us the basics of crowdfunding.
Okay, let me give you a little bit of basics of history here. President Obama approved the Jobs Act on April 5, 2012. And what he did is he effectively approved the law for crowdfunding, which is supposed to take place or take effect if the SEC is ready by January 2013. So why the SEC is because this would involve equity-based crowdfunding. It would involve issuing shares. Entrepreneurs, the intention is to give entrepreneurs easier access to capital by reaching out to the retail investors. And when we talk about retail investors, that means they're not accredited, they're not high net worth, and some of them may not necessarily be professionally in tune or educated into the particular industry they might want to invest. So there's lots of risk involved here. And I would say the SEC is quite busy trying to make sure that investors are protected first. But we in the merchant banking business, it's also our job to protect investors by making sure we train or educate the entrepreneurs on the right things to do on corporate governance, and the same thing with the investors.
Okay, Jeff, do you understand that? Do you have any follow-up questions?
Yeah, I'm going to jump in with a question that I was getting at a little earlier before we went on air. What are the, Tony, type of funds that are appropriate for crowdfunding?
It's not a fund. It's more like what type of business that would be more appropriate for crowdfunding. All right. Again, on history, crowdfunding originated in the arts, donations, of not-for-profit kind of entities. Right now, some people might have seen Pebble Watch. Pebble Watch is a consumer product. It's actually a high-tech health app. So crowdfunding will be effective for consumer products, something that's tangible, something that people can see and feel, touch, right? I don't think it would apply to junior mining. Although I tried it with junior mining, I think it would be applicable for small-scale mining, where people can actually see gold coming out of the ground or being processed in the mill. So it has to be tangible, and it could be something that's meaningful to the community.
Okay.
Yeah, and one of the companies that is fairly involved in this down in the States is a company called Kickstarter. And as Tony mentioned, Kickstarter really came out of the idea of somebody having an idea on a film or a book or some sort of creative art, and they would look for investors to put this together. And I remember listening to the founder of Kickstarter. He said, back in Mozart's age, that's what they did. Mozart would talk about this idea to the audience, and the audience would put some money in to pre-fund the ultimate deal, and in exchange for putting money in, they would be recognized as a founder, or as they would get a signed copy from Mozart or what have you. And so in Kickstarter, that's where it really started. With a lot of technology, it's evolved to a point where, as Tony mentioned, there's technology like, excuse me, like watches or 3D printers or anything else, where if you put money in, they promise to, you can be one of the first people to own this thing. You can get a signed copy. You get a T-shirt that says you're a founder. Lots of different ideas. And what's really what's evolved even further is the fact that now these entrepreneurs don't want to give just a signed T-shirt. They want to give equity. They want to give participation in the company profits. And there's the issue. The issue there is all of a sudden now you're talking about a security or a stock or a bond, and now you're in the securities realm, and that's the big issue with the regulators, both the SEC and all the regulators up here in Canada. So that's it. There's some exciting things. Crowdfunding has a lot of opportunity, but it still has some hurdles to jump over, specifically regarding the securities issues.
Right. Could I comment on your comment, Marty?
Yeah.
That's why we encourage people to go to Healthy Crowdfunder, www.healthycrowdfunder.com. And what we did was we are giving a checklist for entrepreneurs and a checklist for investors, right? I've seen, or I've written on one of my blogs, it takes a long time for us professional finance managers to operate, say, a portfolio and still be 100% great in performance. When you're investing in securities of other company, you're actually investing in a business, and there's so many factors that are uncontrollable to make a business succeed, right? So it's quite important that I would only encourage investors to invest in businesses that they are more familiar with. This is not a Russian roulette or a place to gamble their money as well. And the SEC are concerned about fraud. I am more concerned about business failure. And I'm more concerned about investors not educated enough to go into a business or invest in a business they don't know anything about, right? So that's my only point.
Tony, I raise capital for real estate investments anywhere from, and they might be smaller on your scale, but anywhere from 50,000 up to 5 million. And they are hard assets, real estate, conservative financing. Would crowdfunding be appropriate for a raise like that?
On my first gut instinct, it'll be difficult. I'm sorry to say this, but I don't see anything that's unusual about real estate that present financing mechanism will not be able to do. If you have something interesting, well, like I said, with Healthy Crowdfunder, we're focused on health, wellness, and high-tech health. If there's going to be a health spin or a health twist, maybe we could look into it. But we're very, very vertically oriented. We're not like any Kickstarter or Indiegogo. We're focused mainly on health wellness. Right?
Yeah, and I think just a comment though, Jeff. I think your question was more so not directed specifically at Healthy Crowdfunder, but crowdfunding in general. Is that correct?
That was my question. But, okay.
Yeah, and real estate is not a consumable. Real estate is more a long-term hard asset. If people would like to invest in real estate, I would recommend them to go, if it's a commercial or residential, to go to the specific location of the real estate and assess whether it's worth investing in it, right? You guys from Calgary or oil and gas town, the value of real estate there is different from the value of real estate in, say, Detroit or auto town.
Yeah. Yeah. No, I never want to be accused of being from Calgary, but given that we're from Edmonton. But Tony, one of the things that you had asked, or you mentioned, is the investor needs to have some sort of understanding in the investment.
Right.
But I'm assuming the retail investors that go into, your specific niche, the health niche, they're not gonna be doctors, or some of them aren't gonna be doctors, some of them aren't gonna be nurses, some of them may be mechanics or lawyers or what have you. So, so are you saying that really only people in the health industry should be invested in with Healthy Crowdfunder? And then as a bigger question, then for other niches, if a crowdfunder has a niche in, in mechanics, like what would that mean, that only mechanics should invest in that?
Okay, I'm going to spill a little bit of our strategy, and it will be different. Really, although we're going to be in crowdfunding, I'm going to be reaching out to fellow accredited investors first, the angel investors, the funds, and in fact, we're planning to set up a fund. And when we do invest in a particular venture, we will actually do the due diligence ourselves. Last week, I just decided to become a member of the Keiretsu Forum, which is an angel network in North America. The due diligence process that we conduct is very, very comprehensive. So by the time we actually invest in a particular deal, there's more than one of us, lots of us, who's conducting the due diligence. So the only time I would go to the crowd, the retail crowd, is if we as a group will actually invest in that particular venture, right? So I'm going to start with the educated investors first, and then go to the retail crowd. And because the equity-based crowdfunding is still evolving, I'm going to touch on pre-sales and donations first, because I like to be able to give the entrepreneur the opportunity to validate their products. I want to make sure the product will sell and sell at a profit. If it doesn't sell at a profit, that means they're not going to create value. If they're not going to create value, why issue shares?
Yeah.
There you go.
Okay, good. Any follow-up questions there, Jeff?
Well, I appreciate the crowdfunding niche of health and wellness and health tech. Is that what you said, Tony, the other one?
I call it high-tech health. Let me define what I meant by that. I consider stem cell technology as high-tech. Personalized medicine like DNA analysis is high-tech. The Pebble Watch, it's a health app, iPhone health app. That's high-tech. So I'm just using high-tech health as a generic description for anything that's outside of the conventional, traditional health solutions like drugs. I am not in favor of drugs. I'm more in favor of preventative health solutions. And if it's too late to cure people, I would rather be involved in something that will, predict their propensity to, say, get cancer.
So if I'm the retail investor and I'm excited about what you do, how will you find me? How will you approach me? And what would I be like? How much would I be looking to invest? What's my profile as a retail investor?
Okay, that's a very good question. Another description we use for crowdfunding is a merger of finance and social media. Okay, so every entrepreneur that we will sponsor, we would like to ensure that they are building their fan base of investors. And just like the traditional way, you start with your friends and family, and then from there, your friends and family connect with other people in their network, right? So the portal is the platform that we are going to broadcast. Let's just take as an example as the entrepreneur. We will broadcast your business on the platform, and you will give your, say, 2-minute speech or pitch, and then from there, you should be able to say something that's unique about your product. It's almost like, when you're running for president, you got a campaign, and you got to prove to people that you have something of value to deliver. Make sense?
Yeah.
Yeah, and maybe a follow-up to that, Jeff. A lot of the for example, the Jobs Act, there's a lot of restrictions. You can't go and ask, anybody can't just go ask for $100,000 on a $20 million snake oil investment. So that's one of the issues, because you've got to balance between fostering the capital initiatives and encouraging more capital into entrepreneurs and creating jobs, and then you got to balance out with protecting investors from unscrupulous, people that are just looking to get money. And so what the crowdfunding is doing is they're saying, okay, we're going to cap you, and some numbers that are being thrown out. Let's just give an example. an investor can put a maximum, let's say $1,000 into this investment. If you're not qualified as an accredited or eligible investor. And then on the maximum offering, you can, let's just use a hypothetical example, you can put in $1 million total into the offering. So, you know, that means that you have these multiple $1,000 investors putting upwards to and totaling $1 million into the offering. And what that you can see, you know, I guess the idea is that everybody can afford to lose $1,000, so we're not going to place as many restrictions on the investments and on the entrepreneurs. So.
Actually, what I'm suggesting to investors are not to put more than 5%, between 5 to 10% of their portfolio on any risk, right? And you know, if they would like to invest in the health industry, they should also diversify and invest in other industries. Which reminds me, that's the other reason with Healthy Crowdfunder, we're setting up a fund, because even us as investors, we're also going to minimize our risk by investing in a portfolio of different businesses in the health space.
Okay. Okay. Just a couple other questions here, Tony. You know, we've talked a little bit about what it is. Who do you think benefits from crowdfunding in general? Who benefits and how do they benefit?
Okay, let's talk business. And I keep telling the CEOs or entrepreneurs out there, we're only in business if we are providing something of value to our customers. In the health space, everybody knows the rising healthcare costs in North America, especially in the U.S. The obesity is just rampant. When people are obese, they have a potential to get type 2 diabetes, heart attack, stroke, the whole works, kidney failure, right? So the healthcare system will benefit. People will benefit because, you know, it means changing the lifestyle. And I'm sorry for the drug companies, they are not going to benefit if people are well to begin with, if they don't get sick to begin with, right? So, and oh, I forgot to mention the entrepreneurs. Of course, they will benefit because if they get involved in something that will create value for their customers, obviously their investors will also make money by investing in their shares. But it is a long process, okay?
Okay. Jeff, any follow-up questions there?
Yeah, Tony may have answered this before. I may have missed it. But why in health, I love that you have a niche and that it's something that attracts people and it's doing something that's good and they're investing in it. And I gather from Marty's comments that it's smaller investors with up to $1,000. Is that correct so far?
Yeah, I mean, there's different ideas out there, but that's a fairly common idea where you have you know, you have smaller investors to protect the amount of capital that's at risk.
So Tony, my question, I guess, would be, you could go to traditional sources. In fact, you've already said you start there, and then you're giving an opportunity for the general public to come in and have a little piece of it and see where that goes and to be behind something that's good. Is that what it is? And it's just like, it seems to me to raise the kind of money you would need for any venture in such small increments must be very difficult. But
well,
you've also talked about the social media aspect of it. So is that kind of the...
I don't want to preclude people who would like to invest the smaller amounts. What I would rather ask investors, whether they're accredited or retail, they should follow a very strict investment formula. Like I said, I don't want people to invest more than between 5 to 10% on any particular risks, right? And the first thing, of course, they have to be familiar with the industry, because each industry have their own unique risks in themselves, right?
Okay, good. So, Tony, if people wanted to get further information about what you're doing, how would they contact you?
Well, the best thing is we have blogs. It's called www.healthycrowdfunder.wordpress.com. crowdfunder.com. There's also on Facebook, we have www.facebook.com, healthy.crowdfunder, and we just launched a landing page. The landing page is just a one-page section of our portal that's being developed right now. And from there, you could see or you could download the checklist if you're an entrepreneur. And if you're an investor, please download the investor checklist as well. If I could just add another comment here, I am very concerned about protecting investors myself. I've been contacting educational institutions like BCIT, British Columbia Institute of Technology, and other education institutions to offer courses on investments. And again, within investments, to offer courses depending on the industry, right? I'm involved in mining, I'm involved in health, I'm also involved in high tech. All of those have got different risks. So it's important to me, education is the most important thing. So, you know, while we're all waiting for the equity-based crowdfunding to evolve, let's educate ourselves, entrepreneurs and investors alike. And our policy, our philosophy of Healthy Crowdfunder is different. I'm also on LinkedIn under the name Antonio Ariston Arias. That's it.
Great. Okay. Perfect. Well, thanks for your time, Tony. Thank you, Jeff, for those great questions. And we will talk to you later. Thanks again.
Thanks very much, gentlemen. It was a pleasure.
Hello everyone, I am Antonio Arias, the CEO of Healthy Crowdfunder, the first crowdfunder focused on financing health wellness and high-tech health ventures.
And I'm Joy Case, the host and CEO of Fundit TV, where we have fun talking about crowdfunding.
Listen up everyone, we got a problem. Healthcare costs globally is up through the roof. We have to come up with solutions. And this is why, with Healthy Crowdfunder, we just want to encourage all entrepreneurs out there in health and wellness and high-tech health ventures.
And at Fundit TV, we are highlighting Healthy Crowdfunder. We're here to educate everybody.
Yes, here's the deal to all you entrepreneurs. We're inviting you to sign up and get a checklist called Things You Must Do Before You Do Crowdfunding.
And for all of you health-conscious investors, do you want a preview of forthcoming financial opportunities?
Yes.
Would you like to look at those opportunities before we invite other investors or customers to the deals?
Yes.
Then sign up and get your free checklist, things you must do before you buy or invest.
And finally, to all health-misers out there.
Health-miser?
Yes.
What is a health-miser?
Larry Law, my friend, he came up with this word healthy-miser. What really is, it is a transition to living from not so healthy to a healthy lifestyle. Who knows, after you change your lifestyle, you might become one of the Healthy Crowdfunder evangelists.
So start your day watching our health tips. It should be the first thing you do in the morning, as soon as you get up.
Yes, remember, it takes 21 days before you could change a habit. Yeah.
So what are you waiting for?
Exactly. Come join us at the Healthy Crowdfunder.